Welcome to the Cyclical Investors Club YouTube channel. My name is Corey Kramer. Today we are going to be taking a look at Advanced Micro Devices, ticker AMD, commonly known as AMD. As always, this is not individual investing advice, just how I analyze stocks. I do have at least one other video on the channel where I cover AMD, so if you're wanting a little bit more information, you can just search the channel. Go back. I might go into more detail in that video. I'm going to guess I'll have a similar buy price that I come up with this one. So this will be the fourth buy video in a row. We are on a roll here. Let's see, I'm recording this Monday, April 7th after the close. So Fastcraft hasn't quite updated today's data yet. I think it's actually, it looked like on my spreadsheet it was a little bit lower than this price. But at any rate, I had limit order triggered this morning for this one, so I added to my position, and I'm going to share it here on the YouTube channel. So what I'm going to try to do is for buys that are in the S&P 500, I'll try to share those here on YouTube, and the ones that aren't will remain exclusive to the full Cyclical Investors Club service or the weekly picks over on Patreon. I have a weekly picks service that's $25 a month on Patreon. That's a great place to start if you just want to learn more about what I'm buying, and you get a weekly pick and I get explained it each week. And it's kind of, if you went back and looked through all the picks of the last 6 months, which we have like 27 of them now, I think, and you watch those old videos, you'll get a good sense of kind of all my strategies because I explain those. And then, you know, if you think it makes sense for you, and you can chat with me, direct message me and all that too, then maybe consider joining the full Cyclical Investors Club service over on Seeking Alpha. Those links will be down in the description. All right, so first thing to start off, we always want to see how cyclical historical earnings are for businesses. And we know that AMD is in the semiconductor business. That basically means they're cyclical. But I base everything, especially once there's enough data, on the individual history, right? So we can see that during the Great Recession, earnings went deeply negative, then they recovered for a couple years, then they went deeply negative, then they kind of sort of tried to recover, and then negative, and then we kind of get into a new secular growth phase more recently here. Let's see. So because the earnings came back each time and then eventually went into this kind of secular growth cyclicality, we know it's a deeply cyclical business. So they're going to have like pretty much all semiconductor businesses have a lot of fixed overhead, and then the demand for their end products can fluctuate a lot. So when demand goes down, pricing goes down, and a lot of the overhead stays the same, or there's a delay in the investments that they make compared to, you know. So that's what kind of creates this cyclicality for them, and a lot of industrial businesses too. So there are a lot of businesses like that, but we want the ones that can consistently come back from the downturns. And we really like the ones that can, as you see here, make higher highs kind of during the different peaks. Now, now before, let's see, really before the pandemic, AMD, I kind of avoided it because it didn't really have a strong history. Like, it was kind of there. I really want my cyclicals to be stronger than kind of sort of coming back every few years. It didn't recover this Great Recession high for like 15 years or something like that. So that's not really what I want. But basically what happened was I owned Intel. I bought Intel on one of the big dips in 2020. I actually didn't pay very much for it, and it did pretty well at first, but as we all know, then it got clobbered. And, you know, one of the discussions that I was having when I bought Intel with people was, hey, you know, AMD's like eating their lunch, you know, blah, 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 blah. And I was like, well, okay, you know, I base a lot of what I do on history, and usually about 80% of the time that's a good guide. Well, this was one of the times where it wasn't a good guide, and really things were shifting, and AMD was, now the semiconductor experts are going to comment in the comments and tell me that I don't know what I'm talking about. that's mostly true when it comes to the specifics of semiconductor business, but I understand semiconductor stocks. And I'm telling you what I was thinking at the time. Well, because I had those discussions, I thought, well, maybe there's something to that. And if AMD starts behaving earnings-wise like Intel used to, like, let's look at that. So most semiconductor businesses are very cyclical, but if you if you go back to 2000, Intel was too. But we look at this whole period from like 2005 to 2021. And there really wasn't a whole lot of earnings cyclicality. I mean, it was moderately cyclical, but it wasn't deeply cyclical. I compared this to what AMD looked like. And so I bought it right at the bottom of this dip. It was actually a pretty good buy. And earnings recovered or didn't fall. I mean, that they rose the next year. But the market kind of saw what was coming here. And I don't know. I think I sold it at a very small loss or a very small gain or something somewhere along here. I got wise to it. And then what I did was I bought AMD during this decline. I wrote about it ahead of time on Seeking Alpha and told everybody kind of my buy price, which is, if you go look at my other video, I'll share it. I would have told you the buy price ahead of time this time around, probably. Sometimes I make adjustments, but I think it's about the same. And so I'm pretty sure this was a 65% decline I was looking for off this 2021 peak. And I just about bottom ticked it. I mean, it was pretty, yeah, see? So this one, I just about caught at the bottom here. And I was expecting to kind of hold for more like a 200% gain, 150, 200% gain, which would have been kind of up here. But the recovery was so fast. I mean, it was like a year or less, maybe less than a year. It was so fast. And earnings were just beginning a down cycle. And I was like, well, the market's kind of giving me a gift here. Normally, I'd be willing to wait 5 years to make 100% of my investment. And they're giving it to me in less than a year. I'll just, I was a little skeptical about this super quick recovery. And it was we were getting into the AI kind of era. And I knew that was like a lot of hype. There was a lot of hype behind that probably wasn't going to hold. So but I wanted to respect this secular growth trend, this new one that had started. So I don't usually do this, but I just sold half the position. And I wrote an article about selling half, and the timing on that was pretty good. I forget exactly when it came out, but basically the stock did this little drop right afterwards. And then we really got into, this was like a chat GPT time right here at this kind of bottom. So it was kind of getting rational, and then it just went totally ballistic to the top, which I owned half still. So I was just like, I honestly didn't even pay any attention to it during this time, because it wasn't close to a buy. I'd already committed to holding the other half for the long term, and I still hold it. But basically, I mean, I have the same parameters on now that I had on back here. And I think, I want to say for AMD, I based this off of peer declines, because the business had changed quite a bit. I can double check when I look at my spreadsheet. Let me make sure it's still going to work here. But I was looking for a 60% decline, and I think previously actually there was an 80% decline. It might not load. We'll see. I'll try to be patient and see if it will load. Otherwise, it won't load in the right spot that I want. There we go. Okay. Hey, just need patience, folks. Okay, so let's take a look here. Usually I put in the drawdowns. Nope. Yeah, I didn't think so. Okay, so I would have based this kind of on their general peer group. Semis a lot of times will trade in tandem, although the AI boom kind of separated some from the others. And I was looking for a 65% drawdown, just like I did last time, and before I bought any more. And let's see here, about $80, a little under $80 a share is where that level is. So it's at 83.64 right now. It went down and kind of came back in the middle of the day, but I mean, your rough buy price is right around this area if you don't own any. Now, the strategy I would use, now the philosophy behind this is, which I actually didn't quite follow. I didn't fully follow because I didn't trust this recovery, is I try to buy when the stock is well off its highs at levels that it's shown historically that it's fallen to, plus a little bit of judgment on top of it. And it's a little bit of science because you're looking at what it's done in the past. So you use that as a guide, but there can be often two different types of drawdowns. There could be a time where only semiconductors are going through a down cycle, but the rest of the economy is okay. So maybe this, which is basically what happened in 2022. We didn't have a recession, but this stock fell 20 or 65%. That's kind of one buying level. And then if there is a recession and it also affects semiconductors and there isn't any other kind of big driver there, then you're looking at more like an 80% decline, I think, for AMD. So initially, my first buy price was 65% off the high. The next one was 80. Then the second one never hit. But because I had the lower one in, I was able to catch that and cash out some profits and take this roller coaster ride. Now, to me, I've had the same buy price forever. I'm sure if you went and watched my other video, I probably have the same one. Even when the stock was up here, once it made a peak and I could see that the peak was in, then I know where to measure from. And so, yeah, you just sit back and kind of wait. And so now it's down there. It actually hit it and it bounced off at the bottom a little bit. So the way I would do this is, so if you buy when it's down here and you hold until it reaches this old peak, which is 158, again, oh, look how much it jumped, like 20% a day. We'll just go to here. Okay, so that's in between 150 and 200% return. If you went all the way up, you'd probably get closer to 200%. The idea behind it is if the market was willing to pay this much in the past, if the same conditions or similar conditions arise in the future, it will probably be willing to pay that much again, right? You have a guide to go by. Now, nothing ever repeats like exactly. So you have to, well, you saw I made a judgment here after 100% return to take some profits this time because it seemed like it was just too fast of a recovery. And maybe this time around, the economy's weaker, so it takes longer. And then by the time it comes back, maybe you can only make, you think like 100% is good enough because maybe the market's getting weak again. It takes so long, right? So you use some judgment around the edges, but the idea is we have evidence the market's willing to pay $73 a share for the stock. $200 a share. That's the PE ratio. Ignore the PE ratios. Completely ignore them. They don't mean anything for cyclicals because earnings this year, these earnings estimates are most likely going to be completely wrong. None of the analysts were predicting this decline, right? So ignore that and just say, I don't know. They could go really negative. I mean, they could go fully negative in a bad situation. So, and that's where you'll get the 80% decline off the top, which is still a long way down. If you buy it 60% off a stock that peaked at $100, you're buying at $40 a share. Well, if it goes 80% down, it's going to be at 20, right? So if you buy at 40 and it falls to 20, that's a 50% decline, not a 20% decline. All right. From where people, now this is closer to like a 65% level. So you would save a little bit, but when we get down to those 80, 85% declines, they're deep and so yeah, I just always like to make that clear. All right. So the strategy here is, the initial purchase here is going to be about 65% off the high. I would be willing to take a total 2% weighted position. So every 5% or so off the high that it goes, you could layer in another like 0.5% weighting. So first one right around here, 65, next one, 70, next one, 75, next one, 80. I think that would give a good easy way, and you're measuring not off where you bought it, but off this peak. So you can just look and see what was the peak, like 227.30 is what's on Fast Graphs. I don't know if that's the exact, I think that is the one I'm using because I just looked at it in the spreadsheet. So use that peak, type in the percentage off, and then that will give you your buy prices to layer in. And then you just have to wait for, you have to be brave enough to buy, because if it gets 80% down, things are going to be bad. Okay. So you need a plan in place. I usually don't take big positions because there is going to be, I've already bought 4 semiconductor related, already, in the past week. So I could end up with lots. But so I try to find the best ones. A lot of times they'll ask me about other semiconductors. I want the ones that are the strongest, the longest history, the best history of recovery, and the other ones can be more, there can be good ones too. And if you get one that's a little more on the danger side and you get it so it ends up working out, you can make a lot of money, but you can also lose it all, or 90% or something like that. So you want the strongest ones that you can get. And I think AMD is one of the strongest ones. So worth a 2% portfolio position if you can layer it in, from here down to the 80% off high. I already have 3 positions now. So my next purchase won't, because I hung on to the one from before. So my next purchase will not be until it's 80% off the high. But for everybody else that's just buying now, just starting to buy now, you can just kind of easily layer in, and it's not hard to do. It makes it not too scary because you're not putting a whole bunch of your money on one company. And that's how you deal with business, how I deal with businesses that I know they can fall 80%, but that's how you make money. So, and if you can weed out all the crummy ones or the weaker ones when you start to go buy them, that will increase your odds, because a lot of people, they don't know they're cyclical. They don't have the people that were buying this stock during this AI boom, most of them have no clue it could fall 80%, none. And so knowing that puts you at an advantage, knowing that it's normal, right, for it to fall that much. Like once I committed to kind of holding that rest of the position, I never look at it. Like I don't pay any attention to it. The position I still have, because I already made that up in my mind. Now I'll add to it a little bit as I'm doing now that it's getting lower, because I understand that this can happen. That's why I took some profits early, and that's just part of investing in these deeply cyclical businesses. So you can't lose faith. About the time everybody, really freaks out, and it might not happen even this year. The market's dropping really fast right now, but this could be although with semis usually it's a pretty fast process. It can be a long process, and when we get into all these tariffs and everything like that, a recession and tariffs can extend what would normally be, we'll call it 2-year recovery period, to a 5-year recovery period. So, you just have to be aware, be for the medium term. When I buy these, I'm done. Like I don't second guess myself. For the most part, unless I make 100% any less than a year, like I did there, I might make some small adjustments. But for the most part, if you're buying here, you probably don't want to sell until we get back up above like 200. Now, sometimes I look at these and I'm like, well, that's a pretty peaky peak. And we do have this other peak back here, and we kind of have more, we can kind of see that the market kind of had a little bit more confidence along these levels. And what was that, 150? Like 155. So it might be the case where you're like, okay, this was a bubble. It's probably not maybe going to make it all the way there, but we're buying at a low enough price you can still get a double, right? Basically, if you're buying here around $80 a share, it peaked at 164 here. That's a double, right? From almost exactly a double from where we are. So you're still okay. If you kind of got to be careful sometimes when the market gets a little bubbly, but it can get bubbly again. It did it here, and then it did it again 2 years later, which I honestly couldn't believe it. So all right, those are my thoughts on AMD. Another Cyclical Investors Club buy. I do have a few comments with requests that I haven't put on the board yet. I will eventually get those there. And I'll see everybody later. Bye.